In this video, I'm going to be reviewing four of the computer and technology stocks, and those four are going to be Super Microcomputer, SMCI, Hewlett Packard, HPE, Dell, and Applied Materials, AMAT. And I'm going to be seeing if they still have more room to run. And essentially, I'm going to be using the log scale chart on all of them, and I'm going to be going back from their all-time lows and just seeing how market symmetry has behaved. So first, I'm going to start with SMCI, and I pulled this from the very beginning down here in 2008, and we can see that this is the 45-degree angle, how important that has been throughout time until it just exploded higher. But also what's important is this orange level, how it was a magnet for price for many, many years. And then after that, it shot up exactly to the blue level after some resistance here with the arc. And this blue level was already successfully back tested. And now the ultimate target really is the green level up here, which is around 1830, right? So right now we can see that it got rejected by this angle, and it's battling this bottom green arc right here. So after some time, maybe some consolidation, the plan will probably be to flip this bottom arc to a support and then come up to test the top green arc again, which could be around 1200 sometime, which would also coincide with the previous all-time high. So that should still be some resistance for some time, where price will probably just ping pong in between maybe this top arc and the bottom arc, maybe for some time before it finally breaks above to that $1,800 level. Now, let's put on the Ichimoku just to see if we can get more confluence here. And I'll zoom in. And yeah, we can see exactly what happened with the Ichimoku. And essentially what happened was after it got rejected by this angle completely, it went back down to test the baseline of the Ichimoku, and that held solidly as support. And now it's finally closing a candle back above this conversion line. And with that said, it also closed the candle back above this bottom green arc. So if this can continue, then we could flip this bottom arc to support relatively quickly to try to make its way back up to the previous all-time high, which could match the top arc in time somewhere around election time or so, right? So this chart does look bullish. This chart does look like it has more room to run, especially with this last weekly candle close. It did close above some levels, some key levels, so that's a good thing to watch. But again, ultimately my target is right up here around 1830 or so, and that will probably happen sometime later this year or into next year, I would believe, just because the growth looks like it's still pretty explosive, especially with this move here. So what could probably happen is just over time, just ping pong back and forth until it's ready to go higher, but nothing bearish about this chart at all. Now let's take a look at HPE. So HPE I have pulled up from 2016 here, and we can see how it's been following the market symmetry as well very, very closely. And if we go back to check, it came up almost to the orange level, but you can see this arc kind of got in the way first before it, and the arc was a resistance level for a long time and even tried to break above. But then what happened in 2020? Well, COVID happened and it dropped all the way back down, essentially to this zone right here, the orange angle, and a little bit below. And then finally, what do we see? This blue angle was holding as support ever since it flipped from 2020 November, and it was support ever since all these back tests. But you can see some resistance along the way with the arcs, right? Just perfectly. But now what happened? Well, it looks pretty good. It just broke through the first orange level. It first was resistance right here in March of 2024, came back down, and now what is happening? It's breaking above the first level. So this chart looks really, really good because this is the first time this has happened ever, right? It's never broken above this orange level. And could it come back down and back test it? Yes, maybe around 1975 or so, maybe wick a little bit below, but this should hold as support now and gravitate to the levels above, which could be $26 or $25 on the blue arc, and then ultimately it would get to the top arc and then possibly even the 45-degree angle up in the 40s here, later on next year, right? But this chart does look really good. And if we add some confluences of the Ichimoku onto here, we can see exactly that it's still 100% bullish and there's no momentum lost at all. Everything is above the conversion line, the baseline, the cloud, looking really good. And if I add on the, let's see, the 821, same thing, right? Looks really good there. Now, one thing I wanted to just see is if we pulled Fibonacci from this high to this low down here, does it match any levels right up here? And yeah, the 1.272 kind of matches this first arc right here, maybe in September or October of this year. So that's a possibility to get to the $25 level later on this year. And like I said, into the 30s or 40s, the next level, the 1.618, would be 35, right? So that could probably stop price from getting into the 40s for quite some time. So once it gets to the $35 level, then maybe there'll be more consolidation between the 1.618 and the 1.414. So between 35 and 29 before it's able to break above, but that could take some time, maybe even beyond 2025, right? So we'll take that off. And essentially this chart is really good. All-time highs, right? Breaking the orange level. It's breaking above all the other indicators. 100% bullish. There's nothing bearish about this chart either. So it looks like it has more room to go into the 20s, 30s, and possibly even the 40s. And next we have Dell, which is pulled from the bottom here in the COVID low in March of 2020. And what I can really see here with Dell is that it got to the first level here, and then it went to the arcs where it was a resistance for some time. Then finally broke above the arcs where it went to the blue level exactly, and it stayed there for like a month or so. And after that, it broke above this angle finally, which was a resistance angle. You can see right here, this bearish engulfing flipped it to resistance right there. And it was resistance ever since August 22. And finally, this bullish engulfing. You can see what happens like at these important angles, right? Look at a bearish engulfing right here at this angle for resistance, a bullish engulfing to flip it to support. Like these are the kind of confirmations needed to see if this indeed is going to continue, right? And when we see Dell, the target of the next level is right here around 220, right? So since it already got to the orange level here, went down and actually successfully back tested it right here, went to the blue level there, stopped out, bullish engulfing, so that means this is the next level, 220, and it's probably going to gravitate there sooner than later, while just continuing along this angle up here. So if it just continued along this angle, that could be maybe September, October of 2025. But if it could just keep exploding like we've seen here, then it could happen a lot sooner. So it just depends on the time, but this is the target, 220, for the near future for Dell Technologies. And if we put on the Ichimoku, it's probably 100% bullish, right? Which in fact it is. Oh, it's not. It actually closed below the conversion line a little bit. So it's battling that right now, but once it can close candles back above it, then it should continue higher and higher. But this is still just a range between the baseline and the conversion line. We've seen it many times before, how the baseline has held as support all the way back here since April of 2023. So this should be no different. And if that does break, then we still have the support of this angle below, and worst case, still the support of this arc down here in the 90s, right? But no matter what, this momentum should continue higher and higher until it gets to at least the 220 target. So the future does look good for Dell, and it looks like it's going to continue higher and higher. And lastly, I have Applied Materials here pulled up from, wow, way back here in 1974. So this is a long chart, but as you can see, it's hit every single level perfectly. The first level came up, back tested. The second level, it just broke through right away and tried to back test it here, but the arc was mostly support. And the next level was an important level for a long time from, let's see, 1999 all the way to 2016. So that was like 17 years, right? And this is a monthly chart, by the way, because it's such a long chart and it has a lot of data. So we can see how important that level was. But now price is breaking up. And where do we see price? Well, it finally hit the next level and it closed. Well, the month is not over yet. So it looks like it's going to still close the month below this level. Like maybe it can close above it. So we'll keep an eye on that. But since we can see usually price spends some time around levels, like except for the blue level right here, we saw that it didn't spend any time there. It just kept going higher and higher back in the early 90s, right? So that could happen again, but most likely this level should offer some resistance, and this is like a take profit zone. So if you are in this stock and you haven't taken profits, possibly it's a good time to take some profits because it should spend some time. Maybe it'll go above and come down and retest and oscillate back and forth, but this zone is probably going to be some resistance for maybe some time. Unless it turns out to be like that blue level like we saw right here. So we'll keep an eye on this monthly close and the future monthly closes, but usually levels offer some resistance on the first time they get hit. And the next level that we see is way up here, and that would be in the 2000s, right? So not sure if it'll get there anytime soon. So what we can really see is maybe time will pass a while until it gets ready to go to the blue arcs here. Possibly in the future, but we don't know exactly what time that will happen. But this chart is telling a story, and the story is it's still making all-time highs, but recently it just found some resistance. And if we put on the monthly Ichimoku here, we can still see that it is 100% bullish. But if we put on the weekly chart, we can see that it's also 100% bullish, right? And if we zoom in a little bit more, we can see exactly what happened with that week, right? The weekly candle did wick above, and that was kind of like a bearish looking weekly candle. What does that really mean? This candle that has like a big wick up top, that means it probably could consolidate to go lower. And the conversion line sits at 218 down here, so that would be the first level of support. If that gets lost, then the baseline down at 198. Right, so we could see some consolidation now for Applied Materials simply because it already reached its next level. So this is the one that I like the least right now because the other ones look like they have more room to grow like quicker in a more shorter time. But this one looks like it has hit some resistance here, and it looks like some consolidation is necessary before it's ready to try to test this resistance level again. So again, we'll keep an eye on this, but these are the four that I reviewed, and so far the future does look bright. Even for Applied Materials, it still looks good, but it just hit a wall right now.